Guys, we're in the trade. Win or lose, this will be a great one to break down for you guys. Again, I'm just gonna let this trade play out. We're gonna make a lot of money. Should I close? $4,260 loss. Therefore, the profit on this day was... What is up, guys? Today, I'm going to be showing you, marking out the gold charts, choosing one trade, whether it's a win, whether it's a loss, whether it's a break even. I'm gonna show you executing that trade. I'm gonna place that as a trade to my trading community so that they can take the trade alongside me. That is what we're gonna do today. Win or loss, I want you guys to learn from my process, how I think about when I'm taking a trade, what goes through my head, how I'm managing a trade, and all the rest of it. Firstly, I want to bring you to gold. Now, gold has just hit $3,000, which is a huge, huge achievement for gold. Speaking like it's an achievement, like it's a person, but $3,000 per ounce it's fucking mad, honestly. It's fucking amazing. Very happy for gold. No, but seriously, it's something that I've personally been calling for a long time now. I've been seeing that gold, $3,000, $3,500 this year. I wasn't expecting it to happen this quick because I was calling the $3,000 here when the price was at like 2,600, and that was already after having a huge run up through October, November, December. Now, what we can see from gold is that, especially on the daily, we've had this huge, huge move over the last few days. Of course, this is the current trading day now. Of course, we can see we had this big wick to the upside. Now, often when we see this, again, we see this as a common trading pattern where it's called a shooting star or a top wick. But basically what we can see from price is that we have this wick to the upside as price whips back. Now, after price has just had an all-time high and it creates this, do you think that the majority of traders are going long or short based on daily only? My opinion is that the majority of the traders are going short. Why? Because they see the bullish move up, they see that shooting star to the upside. Now they're going short, looking for price to go lower. Again, if they're gonna buy in this area, which is a demand zone. You can see price moving up high, higher low, high, high. There's your breaker structure. So we know where the buyers are gonna be. They're gonna be down here. So who's here? People now are looking for the retracement. They're looking for that sell down. So that's something that we can expect. Again, we're gonna go into the lower time frames now, have a bit more of a look. We'll start on the 4 hour. On the 4 hour, we're not seeing much. Again, people can get very overwhelmed when they see price action like this because it's just ranging price action, price going sideways, not really doing anything at all. But that's where we can really delve into lower time frames. We can really delve into where the liquidity sits and take a very informed decision going in the opposite direction of that, right? Now, go to the hourly. Again, this is where we start to see some structure now. So here we go. There's your bearish break on the hourly. There's your price pulling back. There's your nice, slow, deep retracement into a supply zone. And here we have price starting to step down, doing bearish breaks. Here we go. Push down, looking for first this low, and the support level, and this low, given the fact that we are in a bearish range. There's your push down, there's your retracement, bearish order flow, price, or everyone is looking for price to take this low out and go 70 pips to the downside. Again, we are 8 minutes before London Open. If I go to the 15, you will see that bearish order flow even better. Here it is. So price pushes into the demand after the bearish break of structure, has a 1 break, 2 breaks, push into demand, pushing lower. Again, this is where we start to see that people are coming into London session. What do you think they're looking for here? If you look at this chart, anyone looks at this chart, it is very obvious that there's a lot of sellers now stepping into the market. We now have a push down, which creates a supply zone here. So if price, especially soonish, if price is gonna whip back up, either come into this supply or show some rejections of any form of liquidity that we can spot, that's when we can go the opposite direction. Again, I'm trying to go the opposite direction of the majority of traders. Sometimes you will see that I'm going in the opposite direction, I will be wrong. Sometimes you will see, I will be right. Where I believe the edge lies here is that majority of traders going one direction means that the market, or the real guys that are moving the market, know how to get these traders to go that way, and then they'll usually push it the other way. So again, I could be wrong on my timing, I could be right on my timing. Directional wise, I am right majority of the time. That's where I've delved and found this edge in the way I trade. So on the 15-minute, we can see the order flow. What I have marked out is a support level just here. The support level is important because the lower price gets into that support, we would actually consider going short based on the fact that the support level is due to be taken out. So if price is going to keep pushing down, and come below this low especially, then it's too risky now to assume that we can buy all the way up. We would actually want to see that sell first. We want to see the support level taken out first. So again, if we do come down here, break lower, push back, show some bullish breaks maybe to show that there's going to be a retracement in this current leg here, then that's when we can actually go short to actually take out this support level low. So you can kind of see how I'm looking at the markets and how I'm feeling about price action, is that I'm really trying to understand where the liquidity is, where the manipulations are, and how we can go the opposite direction. Above price, we do have a bit of a trend line, although if you look at it like this, it looks much more cleaner because you've had one potential second, third, and then we had a bit of a sweep there. So this really was an okay area to go short. Now the reason this is an okay area to go short versus if there wasn't a trend line there is because liquidity from a trend line got taken, then price had to push down. So there's logic behind that move, but if it's just a random supply there, price comes back into it, then it's anybody's game. Like any sort of bearish breaks, a lot of people are going to go short. The market movers know that, so they create that bearish break. Everyone goes short. Generally, they'll push price in the opposite direction. That's how we look at the markets. Again, sometimes we're right, sometimes we're wrong, but the edge is there and the profitability is there. Guys, I forgot to show you. This is today, so 7:55, again, UTC time, which is London time, 5 minutes before London Open. You can see the time there. I haven't paused this video at all yet. I've just been talking. So yes. Now, let's check the lower time frames out. So we understand that we're looking for buys at the moment, unless price is gonna come and take this low, come too close to this support. We understand it. What is price doing? We're whipping back up. We are 4 minutes from London Open. Again, what do you think price will do when it comes into here? If it reacts, everyone's gonna go short. They already see the price. They already understand what price is looking to do. And so they're trying to take that short based on a reaction of the supply. They've seen this push down. I mean, on the 5 minutes, even cleaner low, lower high, lower low, lower high, push down. Everyone's looking for this lower low. But those that aren't in a trade yet, because the majority wouldn't trade until London Open, some people will take a trade here for sure. The majority who aren't are waiting for an entry. They're waiting for price to pull back into this area. They're waiting for a small break of structure to go long, to go short. Again, small 1 minute breaks, the downside generally gets these traders in. But it's not just supply and demand, right? We see this as market structure, lower lows and lower highs. So generally speaking, when you get lower low, lower high, lower low, lower high, lower low, price, everyone will expect that the lower low is going to happen. So for us, it's actually a good opportunity to go the opposite way and anticipate maybe a reversal and that we're going to go higher. So what do I notice here? I notice we have a support zone right there. We have 1 week, 2 week, 3 weeks. We've come and whipped back and we've had an impulsive move. That impulsive move shows me that the strength is there. Again, for me, I'm entering with a 20 pip stop loss. This is just where I've found my edge to lie. 1.5 to 2R is the target usually. Sometimes we can go for a bit more. So you can see now, if I entered this trade, I would be within my 20 pip target. And the reason why this is a good entry is based on the fact that the liquidity has been taken and price is whipped back. Again, this is a win, this is a loss, who cares? It's just how we're gonna look at the markets. All right, so there's that. Now, we always wanna look for any sort of concerns. For me, I don't generally see a concern to not get into this trade, but what I can see is this has it's very, very not clean, which is a small break here. However, I'm gonna monitor how price is moving over these next few minutes. Again, we're 2 minutes before London Open. Oftentimes London Open will come in and get a big push either direction. So I don't wanna be sort of seeing this push, boom, and then go, and then miss that whole trade. However, if price is going to move up and not come into this demand area here, then I would consider market executing this trade and seeing how it's gonna go. Again, I'm just talking you through what I'm thinking in real time before I enter this trade. I'm gonna have my charts open and ready to enter this in case I decide that I believe we have a better chance of going higher. Now, the reason I would enter this trade already is based on that 5 minute, that whip up, very, very strong, shows the momentum. We've taken out this minor support. Everyone wants to go short. Everyone is short from up here. So this is where a lot of liquidity lies, and this is where we're gonna make a lot of money if price is going to move in our direction. Based on the 1 minute, it looks pretty nice and pretty good to go. Where 1 minute before, I think 27 seconds before actually, starting to get the wicks to the upside. Again, trying to maybe trap sellers, trying to make everyone think that we may be heading down into this zone. Again, we want to kind of be either front running traders or kind of waiting for them to be taken out and then getting into a trade. That's the way we have to kind of look at the markets here. The price looks good. Like, this is a good entry. Again, I'm only taking the one trade, so I want to just make sure it's clean, it's nice. There we go. We have all right, so I've just jumped in this trade. Guys, we're in the trade. Win or lose, this will be a great one to break down for you guys. What I'm doing is I'm just placing the trade for my team as well so they can copy it. All right, so win or lose, you can see with the spreads, I'm a tiny bit in the negative now. Very important to be level-headed when you're in a trade. This trade could be a loss, or this trade could be a win. Either way, it's fine, because this is one trade. During the week, there will be many trades. During a month, even more. During a year, so many. So you can't let the result or the direction of one trade influence how you, I guess, react to the next one. There's always gonna be more trades, and there's always gonna be more opportunities. This trade is not guaranteed. In fact, the last one we did was a winning trade. I would like to show you a losing trade as well. And again, it's just gonna show more transparency. It's like, great, like losing is fine. We can lose and be happy. The trade right now is in small loss. Again, we're not really seeing much of a push. Jump to the 15. So yeah, basically I'm happy with this entry. And a lot of the times when I'm in a trade, I won't generally be looking at it because I'm already in it. So I'll have my alerts set, do some other business, reply to some texts. Basically anything to take your mind off the physical trade that you're in is a great thing that you should do. And for me, it works very, very well. It helps me to keep a level head. Helps me to, again, if I hit a stop loss, I'm on a call. Stop loss, all right, next one, no problem, right? So we'll see what happens on this trade. Again, we're moving very, very slow at the moment. The last one hit our full take profit in 8 minutes. If you haven't watched that video, definitely go and check that one out. Starting to see a bit of a push to the upside. Again, we're floating at about $600 profit now. Just seeing how price is gonna move. Again, it's very, very slow. The reason I only go for a 1 to 2 is because that's where I found that my edge is. Trades can go 1 to 5, 1 to 10, 1 to 15. But if you're always chasing those high trades, you could have a trade in 1 to 2, 1 to 3. And for me, that's a decent amount of money. And I could have that trade floating there and automatically just want to close. That's not how I like to trade. I like to have guarantees. I like to know that, okay, price is at 1 to 2, I'm out of this already. Or price is at 1 to 1.5, I'm considering to get out if there's liquidity there and if it's like really could reverse. So you can see that, you know, when you have that sort of strategy, you can have a lower win rate and be profitable. So it's a very, very safe way to trade rather than going for those high risk to rewards, trying to get these massive trades. I don't really like that way of trading. And I think that ruins a lot of people, and that makes people think that, you know, it's the only way to trade. I think that you can be profitable trading any strategy out there, but the way I look at the markets is I want to find something that works for me. Once I find that, then I can be, you know, in a really, really good position. And I found that. When I identify liquidity on the charts, when I'm marking out the liquidity, I'm going to be in a very, very good position to take some very good trades. Again, this one's creeping up in our direction, so it's looking, I guess you could say okay. It's not really doing anything at the moment, but so far, you know, nothing to complain about the trade. nothing that concerns me. I would say that if price is going to come down here into this demand, given the fact that this is still one range, then I think we would be taken out of this trade. That's one observation. Again, it's just about finding observations during a trade. What makes this risky? Why would I continue to hold this? Should I close? Again, these are all things that run through your head when you're trading, but the thing that would change all this and really help you to be like, okay, now this is what we're doing, and if price does this, I do this. It's experience. So for me, I know if price is going to come below this low, there's a good likelihood that I'll close this trade based on experience. I need to see if price is going to come, below this low and just whip back up. There's a chance, really whip back up just after taking this low, then I would stay in. If it's going to take this low and just continue lower, I would consider closing or just take a full size loss on this. Again, a loss is just a loss. The problem with these losses is you need to also be able to mitigate the amount of a trade that you do lose. So many times a trade could be in your direction and you just let it go, let it go, let it go. It's at 1-to-1, for example, price pulls back, stop loss, 1-to-1 again, stop loss, 1-to-1 again, stop loss. Those 3 trades that you could have avoided a stop loss. You could have had a break even on that trade because you're at the 1-to-1, or you could have closed maybe half of it. You can do whatever. There's a lot of different trade management strategies. You have to figure out what works for you. At the end of the day, trading is hard. Trading is meant to be hard. If it was easy, literally everyone would be sitting at their screens making money every day. It's not like that. There is pretty much an equal dispersion of wins and losses every single day, every single week, every single month. This trade, it's very random. This can be a winning trade for me. This could be a losing trade, but it is what it is. Either way, I'm happy. Why? Because I know that tomorrow I'm going to hit the charts, or later on I'm going to hit the charts. I will likely find a winning trade. Why? Based on my statistics, I'm able to see, great, if I'm winning 50% of my trades, then that means that the next one is likely to be a winner. That gives me a lot of confidence if I have a losing trade. If I lose again, say calm, the next one is very likely to be a winner. If I lose again, calm, relax, come back, the next one is likely to win. But I make sure that I don't jump into trades too quick after. Don't have a loss and then jump back in the markets and think, we need to win, we need to make this money back. No, that's how you have multiple losses in a row. Calm, wait for the right opportunity. If it comes on that day, take it. If it doesn't, the next day is fine. There's nothing there. Like, the markets are always going to be there for you. The FX markets in particular, there's always going to be currencies, right? People often say to me, oh, what are you going to do if crypto takes over? Look, if crypto takes over, great. Because now we'll be trading BTC USD, ETH, or maybe we'll be trading ETH against Bitcoin. Great. But right now, it's just nowhere near that. The liquidity is not there, the volume's not there, the institutional liquidity is nowhere to be seen when you're comparing it to the FX markets or the futures markets, for example. But that could be a future for us. We could be all crypto traders soon, like 3 to 5 years. But it's the same thing. Whatever that says in the corner, gold, spot, US dollar against the US dollar, they could say anything. You can trade anything. It's all the same. Understand, the strategy can be applied to every single market. Stocks, cryptos, forex, whatever, futures, everything, equities. There you go. You have a skill set for life. It'll take time, but it's for life. You see? We're now in a bit of drawdown here. Again, I'm very happy to take a loss, and I'll break this down after and show you, again, why we took this trade. You've already seen it, to be honest. But I'll talk to you now about what's happening. So, again, this is somewhere where a lot of traders would get scared. But again, remember that there could be this candle here, this candle right now that's pushing down aggressively, could have been doing the opposite and could be up here. Now, think about what the emotions would feel like if it was up there. You'd be like, oh my God, like, this is the best trade. But on the other way, like, oh my God, it's that gut-wrenching feeling that you're in a losing trade. But in reality, what we should really focus on here is win or lose, you're playing a game. You're playing a video game. And if you can focus on the thought that you're playing a video game here with money that, where you can earn money based on results, really start to think that there could be something here. There could be something that when you're trading in a robotic way, when you're taking a few trades, when you're understanding the markets, that the money doesn't matter. If you can get to a point where the money doesn't matter, win or lose, you're going to be very happy. Because you're going to be able to see the markets in the right way. You're going to be able to remove distractions, take off those goggles that are, with the dollars on them, which are like, oh my God, I need to make money, I can't lose this trade. It's a one trade. It doesn't matter at all, actually. So now we're sitting in a bit of drawdown here. We have taken this low. Price is having a bit of a pullback up. Again, I'm just gonna let this trade play out. If you've been following me from last week, there was very, very good week, let's just say. That was 30 on the week. And this week is the first trade. So that's a lot how I treat the markets as well. It's like when I've traded really, really well, I can afford to let trades just do their thing. Whereas if I had a losing week last week, and I'm coming into the markets today, because those losses can kind of affect the trading a bit in a sense, what we should do then, coming back from a losing week, is that we should just come on the charts, enter a trade, strictly manage. If we're strictly managing these trades, then we know that, okay, good. If we're strict on these, we are going quickly to break even with closing when we think that price could be reversing, great, because you have another opportunity. But also don't be too quick to manage the trade. Don't be too quick to think that you need to go break even, you need to do this because you've had a losing week. Because not giving it the room it needs sometimes, like for example, you get into a small amount of profit, move to break even, price goes break even, takes you out, rockets to your target. Would have been a nice trade. Would have been 5K, 8K, 10K. But in real life, you got too scared. You ended up taking a loss. This trade is a very high chance of becoming a loss. So why is that? Because we come into a demand zone. It's because we've stepped into this demand zone here. We have a very high chance of now taking a loss. Again, we're almost at our stop loss anyway. So we'll just let this one play out. Again, I was talking to you, but we were showing that once price took this low, that we did pull back, and we had this pullback here. But then at the last second, or during that minute candle, price pulled back and then continued lower. So there's again very high chance that we will go lower. We're now tapping into a demand. We now have a lot of buyers that are stepping in there. But we have our stop loss there for a reason. We're going to lose $4,000 on this trade, right? That's it, no problem. We make that back easily. We hit the charts again, we make another 4K or 10K or 8K or 6K. There we go, we're in the green. We need to have this sort of mindset when we are trading. And if we do think like that, we're going to be making a lot more money because we are now detaching, like I spoke to you before, about detaching from the money. It's super, super important. The quicker we can do that, the quicker we're going to become profitable and the better traders that we're going to be. And in fact, I'm happy to show a loss as well, because when I show a loss, it proves the transparency. So I've lost $4,000 on this position. Let's have a look. So if we look at how we entered this trade, we waited for, again, that big impulsive move. So if we go to the 5 minute, that'll show the kind of story, is that we waited for this price to take out this minor support. We knew that all the sellers were going to be around this area and round about in this supply zone. So we waited for a push up. That push up allowed us to get into a trade. Now, we did have a small move to the upside, but again, it just wasn't convincing. Price was kind of really, really slow. So which shows that it might not be done with the move. However, we enter a trade with conviction because again, we can move slow, slow, slow. Say, oh no, close, might not be done. And then boom, no, it's done. It's done. We're at our take profit. Understand that. So what we saw here, slow, price went the other direction. We have taken a loss on this trade. We are now heading back into this support level here. So price, again, it's following with that bearish order flow at the moment. So we could actually see that this low is taken out. That low as well, fortunately for short sellers, has a support level there. So the closer the price gets to that, the more high probability I see of that being taken out. Furthermore, we have our support building up across here. So we could look for, again, price, if it reacts off there, that could be selling opportunity through that support, as we explained earlier. But guys, this is one trade, one day, one pair, one time frame, not one time frame, multiple time frame, one time, which is the London Open. And it was a losing one. But that's fine, guys. I hope you guys got value from this. If you did, let me know in the comments. Because again, I can show you win. I can, record a few, win only, boom, there we go, how good, amazing, I'm the best trader. I think it's important to show the losses too. This is what I'm gonna do more and more. Let me know what you think here. Let me know if you want to see more of these or just transparently, this is the trading day, this is the trade I'm taking. Win or loss, I'm gonna post it on YouTube for you guys to break that down. Talk to me about the entry. Do you think it was a good entry? Why not? I'd love to have some chats about that too. But yeah, guys, that's another video from me. Thanks for tuning in, and I'll see you on the next one. Hopefully you guys enjoyed this video. I do want to close this off by saying I wanted to show you one single trade. Now, I did enter another trade after this. Of course, I didn't show that in the video because I'm very transparent and I show the one single trade. However, on this particular day, we also had, I'm going to put it up on the screen now, we also had an $8,260 win on gold, which is followed by a $4,260 loss. Therefore, the profit on this day was $4,000. So as you can see, it's all about risk to reward. We had a losing trade, which I showed you guys, which I broke down, showed you my mindset. It wasn't long after that I closed that video off that we did have this winning trade. But it's all good. It's a good day, still $4,000. Hopefully you guys enjoyed this video. I enjoyed making it for you. I'll keep these coming. I'll see you on the next one.